The Orange County housing market is still a really hot housing market, but we actually have the tale of two different markets happening right here in Orange County, and that's exactly what we're going to dive into in today's video. On top of that, we're going to talk about inventory, we're going to talk about buyer demand, we're going to talk about days on the market, in addition to how interest rates are affecting not only affordability, but those inventory levels as well, in addition to give you a little bit of a forecast as to what is likely to happen over the next couple of months to help you become a better buyer, seller, or investor in today's housing market. But before we do that, I want to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. And do me a favor, feel free to subscribe to the channel to stay updated on the Orange County housing market, as well as everything that's happening in Huntington Beach. Now, before we talk about the tale of the two markets, if you will, I want to start today's video by talking a little bit about inventory, because inventory is really the key driver of the housing market at the moment. As we've seen interest rates push back towards 7%, actually close to numbers that we haven't seen since October of last year, we're still continuing to see buyer demand in the market and homes sell at a rapid pace, and it's largely due to the lack of inventory on the market. At the time I'm filming this video, we have 2,129 homes on the market, and for a lot of people out there, that means absolutely nothing until you start to compare it to previous years. In fact, inventory is down from 2 weeks ago, and we're currently sitting at the lowest level of available inventory at the end of May that we've seen since they started tracking back in 2004. To provide a little context, the 3-year average between 2017 and 2019, and the reason we use those years is because those years were a little bit more normal. It was a normal housing market. We're not using 2020, 2021, and 2022 because those were crazy times in the market. So what we're trying to do here is go back just a little bit prior to that and tell you what was happening in that market. During that period, from sometime in mid-April through the end of May, about a 6-week period, we would add on average about 590 homes on the market during that period of time. Whereas this year, we actually had inventory go the other direction. So instead of adding property, we actually had less property on the market today than we did back then. And a little more context, last year this time, we added about 965 homes during that same period of time. And that was a time when interest rates were rising rapidly. We were going from those low 3% range at the beginning of the year to the peak in interest rates, which we saw in October. But this was a time when people were really starting to feel that impact of rates. And this year we're seeing things a little bit differently. Interest rates are rising, but this time, there's not a flood of inventory coming to the market. There's not that excess supply of sellers just sitting on the fence waiting to put their homes on the market. This year, unfortunately, no one is wanting to put their homes on the market, and it's largely due to the lock-in effect of the super low interest rates that happened during the COVID lockdown. You've probably heard me say this in some other videos. Nearly 90% of Californians have an interest rate below 5%. In fact, nearly 70% have an interest rate below 4%. And because interest rates today are pushing close to 7%, many of those sellers are looking at the market going, home prices are higher, interest rates are higher, I'm likely moving up in property size, which also means higher property taxes, which in turn ends up with a much larger mortgage payment, which is exactly why we're not seeing inventory flood the market. And the last thing I'll say about inventory is last time this year, we were sitting somewhere around 2,697 homes, which is about 550 so more than we have today. But even that number was well below the 3-year average from 2017 to 2019 of around 6,370 homes. So at the moment, there's a lot of people out there talking about buyer demand. Buyer demand is what's continuing to drive the market. Yes, you have excess supply, but you still have a lot of buyer demand on the market. And that's simply not true. Buyer demand isn't anywhere near where we've been in the past. As of today, buyer demand is sitting somewhere around 1,660 escrows compared to around 2,113 this same time last year, and well below the 3-year average of just over 2,738 escrows during the same period of time. So we have less buyers out there in the market, largely due to affordability, but because you have so little inventory out there, you're still seeing many homes out there sell for the asking price, even over the asking price when the home is priced correctly. And that's really where we get into this tale of two different markets. And what I mean by that is if you're a buyer and you're in that price point, say below $1 million, even 1.2 million, chances are, for one, you're probably having a very difficult time finding a property, but also when you do find that property, chances are you're up against multiple offers and oftentimes having to bid above the asking price. And that's largely due to the fact that there's just not a lot of single family detached homes in that price point. And that's what a lot of buyers out there are wanting in this market. In fact, I have a couple of clients that we've put in close to 20 to 25 offers. I don't know the number exactly, but it's a lot of offers. And they were approved up to 1.2 million, which quite frankly is a really healthy budget. And they were pretty open. They were open to go as far as San Clemente South. They were looking at Huntington Beach, Costa Mesa, even as far north as, say, the Tustin, Orange area. And they found a handful of properties that matched what they were looking for. And we put in strong offers with these clients. They were putting somewhere between 10 to 15, 17% down, depending on the purchase price, depending on how much work the home needed. And that's something important to note too. These buyers were willing to buy a home that needed work. They weren't looking for the perfect turnkey property that needed nothing. They were looking for a property where they could do a little bit of value add, if you will, make it their own. But at the same time, they were very reasonable in what they were looking for. And when we were looking close to the top end of their budget, that 1.2 number, so say we were looking at properties around 1.1, oftentimes we were having to make offers in the high 1.1s, and we were striking out, largely due to the fact that we were up against other buyers in that price point. There was a lot of competition in that price point, a lot of buyers looking for that type of home. But where we found success is when they found a property that was priced under $1 million. In fact, it was priced around $950,000. They came in and made an offer over $1 million, so they went above the asking price on a property that needed some work. It was in livable condition, and it has a lot of opportunity to do some value add, make it their own, but it was a property they could live in and do the work at the same time. And this is where we found success, doing the same things we had done previously, but this time we went to a little bit lesser price point where we could stretch their budget a little bit further if necessary in order to get their offer accepted. So if you're a buyer out there and you're struggling, you're close to that 1.2 price point, and you're looking at homes around $1,150,000 or even 1.2, and you're not finding success, chances are you're going to have to look at homes a little less expensive so that you can go above the asking price in order to get your offer accepted. But on the flip side of that, we're only seeing the crazy demand like that where homes are priced under $1 million, 1.2. I would even go as high as saying 1.5 million. If you're below 1.5 million, chances are it's going to be a competitive market out there. But on the flip side, if you're looking at properties in the $2.5, $3 million range, those homes tend to be sitting on the market a little bit longer. Those homes tend to see larger price reductions. And that's largely due to the fact that there's just less buyer demand in that category, right? Less people that are able to afford those properties. We talk all the time about willing and able buyers. Everybody is willing to own a $3 million home, but the large majority of people aren't able to do that. And therefore, those homes are taking a little bit longer to sell. As a local real estate agent here in Orange County, I subscribe to a report from a local economist that explains this in a little bit better detail. So I'm going to throw a chart here on the screen that shows inventory versus buyer demand versus days on the market for different price points. Now, this chart came from Reports on Housing, which is the newsletter that I subscribe to. As you can see from this chart here, under $1 million, that makes up 34% of the inventory out there, which is about a third of the available inventory. So that seems pretty reasonable. But then when you look at buyer demand, you're looking at 52% of buyer demand is looking at that 1/3 of inventory, which is exactly why you're seeing the craziness out there, and also why you're seeing the average days on the market under 35 days. And as you can see here, when I was talking about the $2 million and above range, nearly 33% of the inventory falls in that $2 million and above range, which is again about a third of the inventory. But as you can see here, only about 12% of the buyer demand out there is looking for those homes. And that's exactly why those homes are sitting on the market longer, with the average days on market above 60 days, as high as nearly 200 days if you're looking for a $6 million house. Now, if you've been following the housing market for any period of time, you really shouldn't be surprised that the really expensive homes take a lot longer to sell. But over the last couple of years, because money was so inexpensive, even the luxury properties were selling quick, inventory was low, buyer demand was high, and because of volatility in the market, because money has gotten so much more expensive, and because a lot of the people that buy homes in these price points have money in the stock market, and the stock market hasn't been doing well, therefore that's affected net worth and wealth and how they actually feel like they're doing. There's just less people out there willing to buy homes at that price point at the moment. And unfortunately, I don't feel like a lot is going to change on that front not anytime soon. Chances are inventory is going to continue to go up over the next couple of weeks to months. I expect it to probably peak towards the end of summer, which is something that we normally see in the housing market. Seasonality tells us that inventory is going to peak sometime probably in early to late August, and it's going to continue to decline through the end of the year, which is when we see the lowest level of inventory. But a lot of it has to do with interest rates. You've heard me say in other videos that interest rates tend to follow inflation. Now, while we have seen inflation come down, we've actually seen positive economic data on multiple different fronts. We're seeing that unemployment is still low. We're seeing consumer sentiment, consumer confidence is higher than expected. We're seeing job openings increase, which for most of us should be a negative sign, but they spin it and say, well, job openings means that you could have wage inflation, which could lead to more people spending money and ultimately pushing inflation higher. Therefore, that's a bad thing. And so I don't know that interest rates are going to improve significantly anytime soon. If interest rates move a lot higher, chances are you're going to see less inventory coming to the market, but you're going to have less buyer demand out there, which means homes aren't going to sell as quickly. Inventory is likely going to stay where it is. You're not going to see any big jumps either direction, but it's likely to continue to build a little bit. Whereas on the flip side, if you see interest rates come down, chances are that's going to stimulate a little bit buyer demand because it increases affordability. But you also run into problems there because less sellers are putting their homes on the market because they have super low rates locked in, like we mentioned before. So if you're a buyer, seller, investor out there looking at today's market, wondering, should you buy now? Should you wait? It really comes down to buying when it's the right time in your life and not paying attention to the media, not looking at the headlines, doing what's right for you and your family, but at the same time also basing it off a couple of things, making sure you have a little bit longer time horizon. Because we saw 35 to 40% appreciation in such a short period of time, chances are home prices are not going to increase significantly over the next couple of years. You're likely to more see home prices move sideways than anything else. In addition to that, you want to make sure that you have money in the bank, you have job stability, you're comfortable with the monthly payment. But if you're exploring the idea about buying a house, have additional questions, I would love the opportunity to guide you through the process. I'm an Orange County real estate agent based here in Huntington Beach, been doing this for 20 years, and I would love to put my expertise to work for you. So do me a favor, my contact information is below. Reach out to me and let's have a conversation. But if you're wondering what's happening specifically here in Huntington Beach, do me a favor and check out this video here.